Good day traders, Richard Jacobs here and welcome to the Underdog Trader Education channel. I want to kick off by wishing you all a happy new year and all of the best for 2018. I trust it will be a prosperous year for all of you. And from our side here at the Trader Education channel, what we want to do is we want to support you in your trading, in how you negotiate the market, in helping you to become consistently profitable traders. That's our ambition, that's our goal. So as far as possible, that's what we're going to be doing. There have been some changes from the format of our videos and our offerings from the education side. I thought what we could do this year is actually just be a bit disruptive. So I'm actually going to put out these videos at no cost. In the past, we've had a subscription model where people have applied to subscribe to daily trade signal reports, and I'd put out these weekly perspective reports for free to people who were interested in it. And I really got to thinking about it, and I've pretty much decided that, you know, what I want to do is I actually just want to share as much as possible from an education point of view. So we do this analysis every day. So call it a bit of pay forward, call it a bit of giving back. But what I'm going to do from our side is I'm going to just put out all of this material to you guys who are interested in it. For free. Obviously, one of the things that is important to me is also to get feedback from you if you find the content useful, if there are other additional aspects that you want us to address as part of putting this material out. So please feel free to either drop me a line, Richard at underdoginvestments.co.za, or either leave a comment or a like or not like, as the case may be, at the bottom of this video. So let's talk a bit about what we're going to cover in these videos, and maybe let's start off with the frequency. I'm going to try and put these things out as much as possible. As I said, we do this analysis daily. I can't promise that we're going to do a video daily, but I will try and at least get 3 or 4 of these things out over a weekly period. And in terms of the content of what we're going to cover, some of it is sort of in line with what we covered in our previous weekly perspectives reports and our trade signals reports. We're going to do analysis on the top 40 daily. That's the chart you're seeing up on your screen at the moment. So we're going to look at things like what's happening on the top 40, and look at the S&P. Primarily, we're going to look at the Rand-dollar exchange rate, because that's also a primary driver in our market. We're going to form some views and perspectives on what the market's been doing, what we think it's going to be doing going forward, and also identify potential setups if you're going to be trading it. We're also going to be sharing some of what we're doing in terms of Underdog Private Wealth, which is the trading vehicle which we use to trade primarily the top 40 on an intraday basis. For our previous daily subscribers, there was an option for a subscribing to a WhatsApp group where you got the trade signals in the WhatsApp group. If you guys are interested in being added to that group, again, just drop me a note, Richard at underdoginvestments.co.za, with your contact details. Happy to add you to that group. Basically what happens then is, as we trade on an intraday basis, you get those setups being pushed through to your cell phones. So we're going to share what's happening in terms of results as well on the Underdog Private Wealth side. We're also going to be I thought I'd try something a bit new over here. In my personal account, I'm working on. I've been doing some extensive backtesting in terms of across a number of different other markets, currency markets, some of the commodities, gold, oil, and what I'm going to be doing there is in these videos, we're starting off with a £10,000 offshore account. And what I'm going to be doing there is sharing some of the setups and systems that we use in terms of approaching those markets, and also looking at some of the results that are coming out of that. So, I mean, that's pretty much broadly what I want to be covering within the scope of these videos. As I said, they're not going to be coming out necessarily daily, but they will come out as frequently as possible. And if anybody's interested in either learning more about Underdog Private Wealth and how we approach the market from an investment and trading perspective, or if you're interested in a more bespoke trading solution, then you can also drop me a line on richard@underdoginvestments.co.za. So guys, that's my admin bit for now. Let's jump straight into the analysis. Right, so let's look at this daily chart of the top 40 which we have up on our screen, and it's worth probably zooming back a little bit and looking at the trading action over the past few months. We saw the market rally very hard sort of into mid-November. Over years, the market put in these higher highs and higher lows, and then we had that push down to the downside, and we saw a break of structure which confirmed on the 1st of December as the market pushed to the downside. And what's interesting now is we're seeing a retracement back up into that breakout level over there, into that previous price structure over there. So based on that, what one would actually expect, and we can add some Fibonacci's to this leg of the move, this breakout, this impulse leg to the downside over here. And as we push back up, we'd actually expect the market to find some resistance here at this previous price structure. Notice that, we had the push up, support, push up, break of support, and now we expect that previous support level to act as resistance. So we expect some resistance to be coming through on the markets over here. And as you can see, over the past week, we've sort of pushed back up into that 53,000 level, put in a higher high but not a higher close, and the past couple of days, really, we've just been, it's almost been inside candles in the sense that we haven't really seen the market able to progress further or deeper in terms of this retracement over here. So we are certainly seeing some resistance over here. Now, if we, as I said, let's take a Fibonacci retracement on this last leg of the move here. Let's put it on there. And you can actually see we've pushed all the way back up into that 50% retracement level. We haven't quite hit that 61.8 level over there, but certainly, just get my drawing tools over here. We'd expect that resistance, and if we were to see some kind of a reversal candle or pattern or confirmation, then we could certainly look for a push back down to this previous swing high, a low over here, as a potential trading opportunity. Now, people always ask me the question, what is a confirmation in this scenario? Well, it depends on your trading system and your trading rules. And one of the things I always emphasize is that, you need to have back tested those particular trading rules and trading setups over a period of time to get comfortable with them. But for typically examples of things where you could start seeing a push to the downside, market could put in a lower close. Market could close inside of a Fibonacci level, and we see a break of the low of that particular candle. You could drill down to a lower time frame and look for patterns, double tops, something like that, to confirm that the market is going to be pushing down to the downside over here again. You could also look for bullish reversal candles, dojis, where the market puts in a nice long wick to the upside but closes near intraday lows. That could be another something else you could look out for as a potential indicator that this market is ready to roll to the downside. As we stand now going into the new week, 8th of January, we still have some pretty decent tails on these candles, and at the moment, at the time of this recording, is there's still indications the market wants to push up a little bit further. But as I said, we're dealing with a zone here. There's no one line that you really get where the market's going to reverse on a dime and move in the opposite direction. So you got to be able to be flexible and evaluate what's happening in the market if you really want to get involved in the downside in terms of continuation move over here. What's nice is, though, we are near where we are in that call it resistance level over there. If we were to get a reversal, we've got a bit of downside that we would be aiming for, something like a push down towards this either this previous swing low closes, or around about this 50,000. Let's just put it in here, around about the between the lower 50,650 and say 51,000. That would be the zone one would aim for potential short, and obviously you'd put your you'd put stops in above swing highs once you get that confirmation of the move to the downside. So that's what we're seeing on the daily charts. The other thing I also like to look at is this normalized average through range, and it's something we've been harping on over the past year in terms of these analyses, which is really the fact that we've seen really low levels of volatility in the markets, and they've been falling levels of volatility in the markets, and especially if you're a trend continuation trader, that makes trading exceptionally difficult, because what happens is you get involved in a trade, and there's just either no range to work with, or the market reverses and moves in the opposite direction and then stops you out, and that makes trading has made trading very difficult over the past year. What is a bit promising for us, and what's interesting about this ADR is I've just plotted a moving average, a 50 period moving average, and of this ADR, and you can see virtually for most of 2017, we the markets, the ATR was actually, the normalized ATR was below its 50-day moving average. We had a bit of a bump in the middle of the year over year as volatility threatened to push to the upside, but then it sort of just slumped. But what's quite gratifying is we saw post that that rally on the market into the middle of November. Post that, we've seen the markets really start to open up, and look at this normalized ATR pushing up. It's crossed up above its 50-day moving average, and it's really pushing to the upside. So that's good to see, and does bode well for us as trend continuation traders. So we've been involved in the markets for about a week now. It's the first week. And we've actually had a decent start to proceedings. I'm just going to pull that up. Before I do, I just want to highlight, you'll see all these letters that I've put on ABC on the daily charts, and what that really was is an attempt to try and identify where you're going to have differing market structures, or on a particular day. So for example, I haven't articulated that very well, but as an example, when you have a market that is strongly trending, you're actually putting in to the downside, for example, you're actually putting in those lower lows and lower closes. But then what happens is you find situations where the market starts to slow down. Maybe you put in a lower low, but not a lower close. And then you have those inside days where the market just doesn't follow through in a particular direction. Now, what you want to do is you want to, and this was based on some extensive backtesting in terms of intraday trading on our side. What you want to do is you actually want to be you want to be dynamic in terms of your trade sizes. So on those days where the market's in strong trend, you're putting in those lower lows and lower closes, or higher highs and higher closes. You want to be maximizing your position size in, still within the parameters of your money management and risk management rules. And on those days where you have those inside candles forming, the market's just not following down to the downside, you're getting some choppiness pushing, coming through, you actually want to be minimizing your position size. So that's what we've been working on, and that's what we've been applying in our own trading, and the results seem to be panning out quite well. So that's the context of what those letters are. Let's switch over and have a look at some of the results over the past week on the Underdog private wealth side, where we've been trading the JSE top 40 on a 15-minute basis. So up on the screen, what you're seeing is a 15-minute chart of the top 40, and what you can see is here, as the year started, we pushed up, we were in a nice uptrend. Then the market sort of retraced or rolled down over here. It actually broke structure right here to the downside, put in a deep retracement, continuation move to the downside, didn't put in a lower I did put in a lower low, but not a lower close, so we're not really seeing a continuation in the form of a lower low, lower close here and trend to the downside. Instead, the market put in another deep retracement. So you could argue that we're in a bit of a trend-based scenario on the shorter time frame, but certainly these ranges over here, and that's, I think, important to us and links up well with what we were speaking about in terms of the normalized ATR and the dailies. We're certainly seeing some decent range over here. We're between 53 1, call it 53 200s and 52 200s. So we're talking about 1,000-point ranges over here. And even if you were just to capture a percentage of those of these moves, that actually would add, I mean, it would be extremely profitable to you as an intraday trader. From our side, in terms of the results, this is the we've had 9 trades so far in 2018, 6 winners, which is pretty decent. Obviously not statistically significant at all, having only done 9 trades, and our average reward versus risk has been 1.84 to 1, and this just shows the number of points. This red line shows the standard number of points, so at the moment we're up about 1,128 points, and the green line shows the weighting of those points. The weighting sort of aligns itself with that ABC classification in terms of the daily chart. So in other words, on A days we tend to weight our trades a bit more or more, and on C days we weight our trades less. So as long as the green line remains above the red line, simplified way of looking at it, it means that applying dynamic sizing to our trades is actually generating additional yield for us. So a decent start to proceedings, but it's fairly early days. I've just included for completeness the 2017 and 2016 results for this particular system. You'll see here in 2017 we had 269 trades for the year, 38% win rate at 1.88 to 1. 2016 was much better, and that's primarily because of the higher volatility that was prevalent throughout 2016. We had more trades, 303, higher win rate 42%, and a higher reward to risk at 2.03 to 1. So obviously that hopefully with this pickup in volatility, this pickup in our normalized ATR, this opening up of ranges, we're going to start to see a move more towards the 2016 type of results than what we experienced over 2017. So that's been more what's been happening on the Underdog Private Wealth side. And then, as I promised, let's have a look over at the international side and some of what's happening over there and what we've been looking at. Let's start off with the daily chart of the Rand-dollar exchange rate, and if this chart looks familiar, it shouldn't be surprising. It looks fairly similar to our top 40 chart, which is primarily because our markets are very much currency driven as a result of the weighting of our Rand hedge stocks in our top 40 index. So you'll see the same trend over here. Going into mid-November, the market puts in higher highs and higher lows. The Rand's in a weakening trend, and then we saw that roll to the downside. Over there, a break of structure happened right over there on the 22nd of November, and the market's pretty much pushed all the way down. The Rand is strengthened all the way down to its current levels around about 12.32. So what do we expect from here? Well, let's look left and see if there's any clues. What's interesting is there's a previous shelf of structure right there. It goes back all the way to March 2017, and if you look even further left, let's just put a line on here. Right over there, you can see that sort of lines up more or less with these previous resistance levels, which were broken in July 2015, became support and pushed to the upside. So we are sort of at a congestion area at the moment, and the currency is heavily, well, the pair is quite heavily oversold. The Rand is heavily overbought. And it wouldn't be surprising to see some kind of a consolidation or even a retracement starting to play out in the near future. We're not seeing that at the moment. It's not something that we would necessarily trade, because you don't really want to be fighting the trend over here unless you're doing it very quickly in and out. But we wouldn't be surprised to see maybe some kind of consolidation before we see another continuation move to the downside continuing. If we were to see that consolidation, we would probably throw some fibs at it, and we can see there's some nice confluence between this previous price structure level over here, right about the 1280 level, and this 23.6 Fibonacci retracement. So that might be something to eyeball going forward. But as I said, nothing manifesting at the moment. The rand is very much in a strengthening trend and continues to be in a strengthening trend, and that's that's gonna add to the case. Just jumping back to our top 40 analysis, that's gonna add to the case for potential downside playing out over here in line with the trend continuation move. What's not going to play into the trend continuation space is the US markets. So let's have a look at the S&P, and as you can see, it's just been one-way traffic on the S&P and continues to be. The market's just pushing to the upside so strongly. It hasn't even put in much or any of the retracement since probably August last year. It's just been pushing to the upside. So that's not a market. Again, we're not going to try and fight the trend. It's not a market we're going to try to fight. But what's going to happen is that's probably adding to or counteracting to a certain extent the influence of the international markets, counteracting to a certain extent the impact of the rand dollar on our top 40. So that that pressure, that tussle's going to be something that we need to monitor over the coming days and weeks. Then, in terms of what we've been doing, as I said, in my personal account on the international front, let's just pull up some of that information quickly. Oh, there we go. That's pretty much the data, the data dump over there. We've had 8 trades so far. We're trading off 4-hour charts, and why I'm doing that is also just to prove a particular point, which is that you can actually trade quite actively in the market without having to watch your screens all the time. So you're just moving up a time frame. Even if you want to trade the dailies or the 4 hours, you can make that opportunity available just by doing your analysis, a bit of analysis in the evening and a bit in the morning, putting your trades on, that kind of thing, and you can actually negotiate the markets fairly well. In last week we had 8 trades, 4 winners, 4 losers, so about a 50% win rate. Our risk to reward's been pretty decent at 2.5 to 1. So our 4 winners generated £265. Our 4 losers cost us £105. So looking pretty decent at the moment. These are all our closed out positions over here, and then we've got a few open positions. And what I'm going to be doing is, you can see we're adopting different systems. There's a what we call a pure price structure trading system, and I can actually 4-hour system as well. The Icanashi system is, both of them are trend continuation systems. The price structure trading is sort of in line with what we spoke about earlier when we looked at our daily charts of the top 40. It's about finding opportunities where markets are in trend, retracing, and what we're looking is for a continuation move to the upside to previous swing highs, or a continuation move to the downside to previous swing lows. That's primarily what we're looking. So, decent rewards to risk, at least 1-to-1, and we're just looking for that quick move back up to previous extremes in terms of price structure. On Iconashis, I tend to try and run these trades a bit longer, and what we're looking for there is to get on board a trend and try and ride it as far as possible. In terms of what I'll share with you, I may share some of the Icanashi trades, but primarily because I think just from a pure education perspective and a application of price structure understanding, I think the price structure trades are a bit more what's the word I'm looking for? They're more useful in terms of seeing how one can use an understanding of price structure to actually implement in the markets. So I do have a couple of setups, and I think one of them actually just triggered now that I want to flag to you guys, and I'll pull those up and we can talk through the logic of what we're doing there and what our targets are and how we're applying our understanding of price structure in those particular setups. Okay, so first up we've got the USD Swiss franc currency pair, and there's a 4-hour chart. I've drawn the price structure in already, and what you'll notice is, I'm just going to look left over here, the market had been chopping around, it put in a higher high over there, then put in this complex retracement, which actually then saw the market break to the downside below this previous swing low over here, as it put in a lower lower and lower close. And then we saw over the past few days the market's rallied up, back up into this into the breakout zone. Throw some Fibonacci's at this last leg of the move over here, or even over there, depending on your preference. I like to look at this last leg of the move. We saw this pullback all the way up here. We saw a move into the 38.2 retracement level, and then what looks to be the continuation move to the downside. So we've actually gotten involved to the downside over here. We're looking for a short move all the way back down to this previous swing lows over here, and as you can see the market is not doing. There's our entry level. I think we actually got a better entry level over there. Let's just pull it up quickly. We got in at 0.97556, so that's our entry level over there. Our stops are up above this previous swing high over there, and we're looking for this move to the downside. So just over a 1-to-1 target reward to risk that we have in play on that one. And then the other one I wanted to look at was oil. Let's pull up that chart. Okay, so again 4-hour chart of oil, and as you can see here, market's been pushing up nicely, putting in a series of higher highs and higher lows with decent retracements, and here we've got this last retracement back into this previous price structure, putting a Fibonacci on this last leg of the move. It pulls back into the 50% retracement level over there, and then we see this continuation move to the upside over here starting to play out. We've actually put our orders in at around about that 67.47.9 level, so we haven't triggered yet. What we're looking for is the market just to put in a little retracement here and catch our entry, so that we can try and ride it back up to this previous swing high over there. And we've put our stops in right down here just to give enough space should the market decide to come back a bit deeper than this entry level. So that's one that hasn't triggered yet, but we're certainly keeping an eye on for continuation move to the upside as well. So I mean that's the kind of analysis that we're going to be doing for this for the purposes of this exercise. And as I said, what the other learning that I think is important that we can bring across here is in terms of risk and money management. So for example, just going back to the results of a year on a £10,000 account, you'll see that I mean you can even trade it a bit smaller, because our average losses at the moment are £26. Our average reward is £66. So what we're going to try and do is we're going to try and manage this, apply good risk management. We're going to be trading multiple pairs, so we're pretty much trading all the majors as well as gold and oil, and even the S&P on a 4-hour basis we'll have a look at as well. If any other trading opportunities pop across our radar, we may consider those as well, and I'll table it over here. But really the idea is to actually just to share with you. I want to be able to share every trade setup before we get involved in it. Just doesn't make practical sense, but certainly as much as possible, and the results, so you can actually see how we go through this process. I don't even guarantee that we'll be profitable in terms of this exercise. This is something that I'm doing in my own personal account, but it really gives you, I think it's useful from an educational perspective, in that it gives some insights in terms of a lot of the practicalities of trading. Things like using a longer term time frame. How can that practically work? Especially if you have a full time job. Things like money management or risk management, minimizing your exposure on any one particular trade, things like dealing with drawdowns. I think we're going to experience all of those things as we go through this process, and I'm kind of excited in terms of sharing that with you and being in a live, call it a live scenario, in terms of giving this feedback. None of these things are doctored; these are actual trades that we are taking and that you're seeing the results of. So, guys, that's I think that's pretty much it from my side. I hope some, if not all of this, was useful to you guys, and I'll share with you as things go along. I'll share with you how some of these trade updates are playing out. We'll continue to share our analysis of the top 40 and our results on the Underdog private wealth side. And if new setups do materialize, I'll share those with you as well. So, guys, all the best for your trading if you're just kicking off for the new year. And again, I just reiterate, I trust it will be a prosperous and profitable year for you. I shall chat to you in the next